Well, we were certainly surprised by the number. It came in better than forecast, and Wall Street had been leaning towards a worse than forecast number. I guess the important thing is that this was a better than expected number in what's expected to be a very weak quarter. Don't forget, we're only thinking that growth is going to be about 1.6% in the second quarter, and so far, spending, industrial production, even housing have been coming in soft. For months we've been worried about this growth slowdown that would lead companies to maybe cut back hiring, but they didn't apparently. We may have gotten past that idea. In particular, the rise in the unemployment rate this time was good news because it was caused by a big increase in the number of people who went out and looked for jobs. Normally what happens when the market and the economy is picking up, it's something that we have been waiting for. On the other hand, it's not so good as to tell us that the economy is really picking up steam because hours worked didn't increase, earnings didn't increase, so we didn't see additions to spending, or at least the possibility of additions to spending. So at this point, we still have a ways to go before we can say this was unambiguously good news.
What about the Fed, though? Is it good enough for the Fed?
Well, that may be wishful thinking at this point. It seems like more we're on hold at the moment. It didn't knock the Fed off track, but the question is, what track is the Fed on? Ben Bernanke suggested, of course, that they might begin tapering their QE bond purchase program in the next few meetings. Well, those are June, July, and September. But he also said that would depend on substantial improvement in the labor market, where we're still short, and not just job creation, but growth in the economy. All those other statistics I just talked about as well, they want to ensure that growth continues. So basically, you want to cue the elevator music. The Fed is on hold, as I said. Look for market moves now when Bernanke speaks next, because it doesn't look like the data is going to improve quickly enough to do it. He'll be talking, obviously, after the Fed's next meeting at the end of June, and then his Humphrey Hawkins testimony in July.